I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath. And anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought. And it needed to correct. It did. And here we are back above 50 again. So yeah, I say buckle up for what's coming next. You have massive institutional money, traders and analysts and chief investment officers speaking to the most sophisticated traders in North America, saying 25% of your portfolio in gold is not too much. So when we talk about record highs around 4,400 gold and then it falling off and everyone's saying it's over, I find it disingenuous at best when you have these analysts saying this. And here we are back up above $4,100, and that shows the strength and the underlying support. So gold's held up because of central bank accumulation. And to me, that's what we've been saying forever.
The global precious metals market continues to face heightened volatility as gold and silver prices remain under pressure amid tightening global supply. Silver demand, particularly from industrial sectors and renewable technologies, is outpacing available inventory, while gold's safe haven appeal strengthens amid economic uncertainty. Recently, both the LBMA and COMEX have shown notable declines in physical reserves, signaling a possible supply crunch. As investors seek refuge from inflation and geopolitical risks, analysts expect further bullish momentum for both metals in the months ahead. In the recent discussion, renowned precious metals expert Andy Schectman shared his insights into the growing imbalance between silver supply and demand. He highlighted how shortages are emerging across major exchanges like the LBMA, COMEX, and Shanghai markets. Schectman emphasized that silver is being pulled in every direction, industrial, investment, and governmental, creating an unsustainable strain on global availability. He cautioned that while mainstream media remains silent, the real shift will be evident once official channels recognize silver as a critical strategic asset. Let's watch clips from Andy Schectman's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think we're at a tipping point in the silver market. And I mean, I think you point to the growing shortage of physical supply at the highest levels, the LBMA, the COMEX, and now even the Shanghai market. They're all showing stress, if you will, in supply, and the amount of, or the number of deliveries is off the chart. And coupled with, surging demand for things like industrial, investment, central banks, sovereign wealth, the same stuff we've been talking about forever, man. Silver is being pulled from every direction. That's just the bottom line. And not enough talk about it anywhere except on the alternative media channels, so it doesn't gain any traction. But where you will start to see some traction, in my mind, is the fact that the U.S. government just designated it as a critical mineral. And to me, this changes the narrative. Silver is no longer just a commodity. It's a matter of national security, national strategy. And when you talk about the kind of potential that silver has, remember that in terms of market cap, it's the tiniest little nothing market. And when capital begins to flow in, like the United States government and the sovereign wealth funds, it doesn't move gradually. It will erupt at some point. I do believe that. But the bottom line, Jesse, is you got tight supply, you got surging demand at the highest levels, coupled with systemic risk and the LBMA and what could happen if we see a delivery failure, coupled with official recognition. I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath. And anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought. And it needed to correct. It did. And here we are back above 50 again. So yeah, I say buckle up for what's coming next. The fact that the U.S. just named silver a critical mineral, along with China's tightening exports, there's no coincidence there. This is governments recognizing, I think, silver's strategic importance. We know that India has been a massive player in the silver market. You can find quotes that it's purchased between 6, 7, 800 million ounces in the last 5 or 6 years. Copious amounts. We know that Russia said we're going to add it to our strategic stockpile, being one of the first countries ever to say that. We see massive deliveries. Talk to David Jensen on the COMEX, the LBMA numbers, huge deliveries coming off the LBMA in a hugely rehypothecated market where way more contracts exist than bars standing behind it. To your point, we saw Saudi Arabia jump in And I think it bummed a lot of people out that they bought SLV, but the amount that they bought in SLV allows them to actually stand for delivery. I think there are a lot more countries that have been doing this just on the down low than we are led to believe. You look at China as the second largest producer in the world, flying all around South America, going directly to the miners. Sean Kunkun has talked about this, CEO Dolly Varden, where they go right to the miners, disintermediating the marketplace, buying doré and concentrate right from the miners, paying double what the West will, and sending it back to China to refine it. They control the majority of all the metal refining and rare earth refining, so they just put it on a barge and send it on back to China. But it's coming from the second largest producer in the world, so that should put a little bit of context into it. If they're making that much or producing that much, why fly all the way to South America to pay double what the West will to buy doré and concentrate and send it back for refining? I think you will see that. I think it's been there under the surface if you really dig. But I think a lot of countries, especially those in the BRICS, have understood that, silver is and gold. This is a race for the world's commodities. And it's not just the precious metals. It's the base metals. It's the soft commodities. He or she who has the gold makes the rules is how it used to be. How about he or she who has all the world's commodities makes the rules in the coming future? And I think that's what you're seeing. So what it really is the smart money trading ahead of the news. Like, they knew that this was going to happen. They knew that it was going to be reclassified a critical mineral. So what do? They reshore it. They say it's tariffs so that London releases it and Switzerland sends it. Oh, by the way, it's reclassified. I mean, everything that at that level that they do, you look at all the massive gold accumulation in 2016, 17, 18, and 19, and then the Basel III reclassification of gold. These things that at the highest level, information is worth more than anything. And the people accumulating it, the central banks, the sovereign wealth funds, they're not just the most well-funded. More importantly, Jess, they're the most well-informed. In my career, almost 36 years, I've never seen Wall Street or Main Street acquiesce to anything other than 5% of gold, of an asset, a portfolio rather, being in gold. And, and it was acquiescing at best. Fine, put 5% of your money in gold. Now, recently we've seen the chief investment officer of Morgan Stanley say, no, sell half your bonds and buy gold. Their new platform, according to him, is 60 stock, 20 bond, 20 gold. You got Michael Hartnett, the chief analyst for Bank of America, with this very, very, very expensive newsletter that goes directly to the institutional trader. It's like many thousands of dollars a year. He's saying, no, it's 25, 25, 25, 25, 25 gold, stock, bond, short-term treasuries, gold. Jeffrey Gundlach said 25% in gold is not overweight. And then the 6,600 part, that's Jeffries. They used to be a primary distributor for all the world's mints. And they said 6,600 is their next target, at least intermediary target, for where they expect gold to go before it takes a little bit of a breather. You have massive institutional money, traders and analysts and chief investment officers speaking to the most sophisticated traders in North America, saying 25% of your portfolio in gold is not too much. I mean, that's just insanity, if you ask me. But the bottom line is gold isn't just strong, it's structurally more attractive than many people realize. And I think that the recent pause is the calm before the next leg higher. That I do believe. And maybe this is it here today as we're up over $100 as we're talking. Being the reserve currency is now a hindrance rather than a benefit. Now, if you are trying to bring back manufacturing, you have to have a weaker dollar. How do you get a weaker dollar? You let gold go to levels that no one can imagine, and I think you will see that. Now, you could argue Bitcoin too, but take a look at USA Tether as an example. USA Tether, which is already Genius Act compliant, their CEO is a man named Bo Hines. Bo Hines was Trump's crypto czar until August. So the rules that Bo Hines was creating, he is now benefiting from. What is Tether doing? They have 12 billion in gold right now, more than they have in Bitcoin. About 8 billion they have in Bitcoin, according to their last numbers that just came out. Here's how it works. So anytime money moves, it'll be backed by a stablecoin. It will move instantly, like Venmo or Zelle across a blockchain network, instant settlement, if you will, and it will be backed by U.S. Treasuries. Now, the interest on those treasuries is not transferable to the holder of the stablecoin. In other words, Tether gets to keep that interest. What are they doing with it? Well, they're buying more gold than they are Bitcoin, but they're buying Bitcoin too. Now, if you realize that Bo Hines is in this and kind of an advisor, what if they've worked out a deal with some of these stablecoin holders? Say, here's what you're going to do. Anytime a dollar moves across the globe, you're going to back it with U.S. Treasuries to lower the rates synthetically, not organically. You're going to do that. And then you're going to take the proceeds and you're going to buy Bitcoin to someday maybe pay down the debt. And you're going to buy gold, not to let gold go much higher just for the hell of it, but because rising gold devalues the dollar, right? Judy Shelton on again. I had her on 6 months ago, but she said the same thing to Michelle, that in no uncertain terms, she believes, according to what Trump told her, that we will peg the back end of the bond market to gold July 4th of next year, the 250th anniversary of the country. And, people talk about, will gold be revalued? Look, that's not conspiracy anymore. It is actually in the Genius Act and says in 2026, they will revalue gold. But the point of it is, you put gold at that level, it benefits every central bank on the planet, but it massively devalues the dollar. That's the point.
The insights shared shed light on the undeniable pressures building within the precious metals sector. With silver supply tightening globally and gold maintaining its safe haven demand, investors are witnessing the early stages of a historic shift. The convergence of industrial demand, central bank accumulation, and dwindling reserves could signal a major turning point for both metals. As global economies face inflationary strains and currency instability, tangible assets like gold and silver stand as reliable stores of value. Andy Schectman's perspective emphasizes awareness, a call for individuals to recognize the underlying changes before they become headlines. The growing disconnect between paper and physical markets might soon redefine asset security and investment strategies. Staying informed today could mean protection tomorrow. If you found this analysis insightful, don't forget to like, share, and subscribe for more updates on gold, silver, and global market trends.